Mr. Chairman of RBA Council, the Chief Executive Officer of Rwanda Bankers Association, leaders of Rwanda's financial institutions and development partners, private sector operators, researchers, and all protocols observed. Good afternoon to you all. It's a great honor and privilege to be one of the presenters today, so thank you so very much, RBA, for granting me this opportunity, and most importantly, for spearheading this important initiative. I am Flora Gash Kambabazi, the young economist at the National Bank of Rwanda, and hereby to present the research study which is entitled as From Access to Impact, Exploring the Access Usage Imbalances of Digital Financial Inclusion Among Women, Youth, and Rural Communities in Rwanda. This work was co-authored with Adeline Mukashema, the Senior Principal Analyst at the National Bank of Rwanda. Before diving into the presentation, I would like to make a very brief disclaimer that this work, both the conduct of the study and the presentation of the findings, was prepared and even undertaken by the authors on our individual capabilities, not necessarily representing the official views or position of the National Bank of Rwanda. Every transformation begins with a question: where have we come from? How far have we come? And how does our progress has been turned into a real meaningful change? Rwanda has really made a progress in expanding access. Now the conversation is no longer about the access. It has turned into asking ourselves if that access has been really turned into a real and inclusive financial opportunities for all. It's in that regard that my presentation will run from the background of the study. Apologies. From the background of the study as it proceeds to the conclusion and recommendations. According to the World Bank, financial inclusion is becoming a widely recognized critical enabler of economic developments as it offers access to the financial services such as credit, insurance, pension payments, among others, and making it the one of the key contributors to poverty reduction and shared prosperity. And building on that, the growth of digital payment services has become one of the most important significant developments in the global financial sector over the past decade, whereby mobile money has surpassed 2.3 billion registered accounts with over 500 million active users. And another real example to reflect this was provided by GSMA, whereby in 2024 alone, mobile money has reached to 85 billion transactions worldwide with a total transaction value of $1.68 trillion. And this progress it's really reflecting the increasing role of digital financial technologies in the financial access, which was truly supported by emerging markets, whereby the sub-Saharan Africa is taking the lead in the adoption and even the active utilization of the services. And this is really supported by high mobile penetration together with the limited access to the traditional banking access. Coming to the Rwandan context, Rwanda has really made a progress in the financial inclusion, whereby in 2024, financial inclusion reached to 96% of adults, up from 77% in 2020. And this was truly supported by mobile money, which has become a dominant gateway of digital financial participation with 9.8 million users, which represents 76% of adults. And however, despite that widespread of mobile money adoption, the use is still limited, whereby it is even reflected among women and adults, whereby the account ownership is there, but the utilization is still limited, which was even reported by the FinScope 2024 Women, Gender and Youth thematic report. Coming to the problem statement, despite that high access, usage is still limited. There is still a gap. And the gap lies in the usage intensity first, whereby the individuals tend to utilize these services occasionally or even using just simple person-to-person transfers. And second, the usage lies in the user diversification as advanced services such as merchant payment, bills payment, online shoppings, and government transactions are still just limited among women, youth, and rural populations in the country. And yes, this is a problem because the full benefits that digital payment provides are not very fully realized. And even that our journey of moving from access is still slowed down. Also, financial service providers are also becoming discouraged or demotivated of improving new products, improving the existing services, or even investing further in the digital payment systems. It's in that regard, in the light of these persistent gaps, that the study was generally intended to examine the gap between access to digital payment services and the actual utilization among women, youth, and the rural populations of the country. And to achieve so, the study was intended first to identify the digital payment platforms and the extent of the access usage gap. Second, for the factors influencing the digital payment usage. As thirdly, it was intended to identify the key constraints limiting the digital payment utilization among D3 underserved population. And these research questions are aligned with the specific objectives. Moving to the methodology, I won't spend much on this, but again, I wanted to give you the intuition behind why the chosen methodology was chosen. Descriptive statistics was chosen just to help us now looking on the digital payment platforms that are utilized in the country and even the extent of the access usage gap. And this was found as a starting point because before now looking on the determinant of digital payment adoption, it was necessary now to look on the existing level of inclusion. But again, due to the reason that digital payment inclusion descriptive statistic methodology, it just describes the patterns. It doesn't explain the reason why these differences exist. It's on that reason that on the very second objective, the Heckman selection probit model was used so that we can now look at the factors influencing the digital payment services. And this was chosen, that model was chosen because the digital payment adoption involves two steps. First, the use must be there. Second, the access must be there on the very first, and the usage follows. And after now looking at the determinants of the digital payment utilization on the very third objective, the principal component analysis was utilized. And the reason for this, in the data, there were several constraint-related variables. Now, instead of analyzing each constraint, we use this model in order to help group them into a broader dimension so that we can even see those key constraints that limit the utilization among the three groups and those that truly needs a policy attention. Now moving to the most important part of the presentation, which is results. It's even obvious in the figure that mobile money is widespread across the three population groups. And this is linked to the accessibility and affordability and convenience which is found there. Unlike traditional banking services, mobile money doesn't require you to just move with long distance just to achieve those accesses. You need just to be there and then you access your services. For women, we have, it is represented by 73% and youth, it has high adoption with 78%, while the rural population follows closer to 70%. And again, coming to the banking institutions, the usage is still limited due to the reason that there is low digital skills, low confidence, and concerns about security fraud and limited confidence concerning about using the banking institutions. For being specific, for women, the banking T represented by 17%, while youth 22%, and for the rural population 14%. Now coming to the government digital payment platforms is still limited due to the reason due to the reason concerning about awareness, integration of government services into digital platforms, and citizens just prefer the private payment ecosystem that they already use regularly. And again, the key message from all of this is that we need now to consider these three population groups as different segments of the groups, because they face different challenges which limit them to utilize these digital payment services. Now coming to the access usage gap. Starting with women, the access usage gap is significant, meaning that here the problem is no longer about the availability of the services. Here the problem is, are they turning the access into usage? Obviously, it's no. And the reason due to that, women in the country are still facing challenges related to limited digital skills, low confidence, concerns about security and fraud, and even the limited control over financial decisions within the households. Coming to the rural population, the pattern is slightly different. Yes, the access usage gap is significant even there, but here it's because of the environment that the rural users are utilizing or are engaging with the services. Here, even though Rwanda has made the progress, has made the efforts in expanding mobile money or networks across the country, but again, rural users still face challenges related to weak network connectivity, fewer nearby agents, limited access to smartphones, and even the cost of transaction relative to their income. And coming to the youth, here the story is different, meaning that obviously, the access usage gap is statistically insignificant, but again, it shows that the youth here tries at least to have that effort of turning access into the utilization of digital payment services. And this is due to the reason that the youth tend to be engaged with the smartphones, the platforms, the technology. They're even willing to experiment new services and even learn by use. So it's obvious that here, these three population groups, they need different interventions, whereby the women needs those interventions that increases or improve their digital confidence and financial empowerment. For rural, they just need stronger infrastructure, literacy, affordability, and service reliability. But again, when it comes to the youth, we also need those opportunities to expand their engagement with wider digital financial ecosystem. For instance, now engaging into the digital savings, credit, among others. This is the results of second objective, but I won't dive into all of these econometric results of the Heckman selection model. As it's obvious, there are some who are insignificant, others are significant at all three significance level of 1, 5, and 10%. But again, for the next slide, that's where I will now look at the key factors that truly affect the digital payment utilization, drilling from the model and even the implication to the case of Rwanda. Digital payment usage is influenced by the individual ability and capacity to engage with the services. Education here is very important because just utilizing these services requires just more than just having an account ownership. The individuals now needs know how to navigate with digital payment platforms, how to complete transactions, and even how to confidently utilizing the services. And again, the results show that the economic participation matters here. Here in Rwanda, we have those who are employed and even those who are engaged in self-employment. So for instance, business owners need these digital payment services in order to just getting the transfers, make payments, and even receive the payments, while those who are engaged, they also needs them to just receive their own payments, manage their daily transaction and others, meaning that those people who have the economic participation, who in one way or another economically participate, they tend to use these digital payment services more frequently than others. The result also shows that the income, access, ownership, and affordability is truly matters, because here in Rwanda, even a very small transaction charges can change the decision to utilize the digital payment services. So for households with irregular or limited income, they tend to have less usage of these digital payment services. The result also showed us the importance of mobile ownership, because having the ownership to owning your mobile phone, your personal mobile phone, increases the utilization of these services, while not having it can reduce the engagement with these services. Last but not least, it's about the transaction cost and financial literacy, which continue to shape the user's behavior. The higher transaction costs limit the utilization of these services, while for recent, the financial literacy increases the confidence to utilize the services.
Ms. Flora, we have about 2 minutes left.
Okay. Now to the third objective, which was the last for my study, we have the constraint which limits the people to engage with the services. The first is about the capability and literacy constraint. Moving to the cost and affordability constraint, trust and reliability. Trust really is a very critical in utilizing these services, because people need to feel more confident that their money can move safely, and even the problems can be solved as quickly as possible. Last but not least is about access infrastructure, which truly also, if it's not appropriate, they can hinder the utilization of digital payment services. Conclusively, the study reminded how Rwanda has really made an effort in expanding the digital payment services. But again, on another hand, it also reminded us that access doesn't always turn into the actual utilization. And again, we need that to, as I said before, to treat those groups as different groups. As again, also, we need to know that Rwanda has really built a foundation of digital financial inclusion. Now the next step is to ensure that those underserved groups truly meaningfully and consistently utilize these services. But again, that doesn't happen just like that. That's why some recommendations emerge. The very first recommendation is to increase the affordable and interoperable digital payment infrastructure. The second is now to look at how the financial service providers, namely mobile money operators, bank fintechs, have to expand on creating and offering low-cost, user-friendly, demand-driven, user-centered, and simplified inclusive digital payment services. And on third recommendation, we need to scale up the targeted digital and financial inclusion, which can truly build trust, confidence, and even the consistent utilization of these services. But above all that, the most important recommendation is that we need to have the coordinated action between the government and the private sectors. But again, we also need to look at how these three groups, that was my main target population, looking on how they can improve skills, trust, confidence, addressing some existing barriers, so that we can tend to lead the country to move from financial inclusion to the inclusive finance. Thank you very much.
Thank you. Thank you. Do we have any contributions? We can take one or two, if there are any. We have one question here. Do we have any other?
Thank you very much for very good presentation. I've got two questions. The first question is, if you look at your slide on the factors that are influencing digital payment, you listed 4 factors, and I wonder whether you have an idea of the contribution of each. I mean, what percentage of the respondents say they couldn't use because of those factors, if you've got the percentage figures. My second question is, in your recommendation, if you look at the factors that are influencing digital payments, one of them is the economic capacity to own, for example, smartphones. So what would be your recommendation to ensure that there is increased access to smartphones, because that is fundamental to people using digital services that are being developed? Thank you. Sorry, my name is Nelson Ijumba from Covent University Africa Hub. Thank you.
Thank you very much, Nelson. You asked, if I'm not mistaken, about the percentage of each factor. Here is a table because this is not maybe the academic presentation. I didn't want to dive into a lot of statistics. So, yeah, the statistics. This is the percentage. For instance, if we may take an example on maybe the financial literacy for women, the way it is interpreted here, I'm saying just the third last line, financial literacy, that's an example. We interpret it in the way of saying that when the individuals, namely women, when women has access to literacy, they tend to increase 74% of the utilization of digital payment services. So you were asking about the percentage of each factor, which was highlighted in all the next slide. That's how it is interpreted. I think because of time, I can't go through each and every variable. And again, the second question you're asking about smartphones, what we can do about it. Rwanda is still supporting, Rwanda is still there, Rwanda is still the government which looks on where there is a gap so that it can fill. I think the smartphones which is there, it's not like the proportion of those who have smartphone among these three groups is not equal. So I think we can look at where there is still that significant gap so that we can try to meander around, giving them so that they can also have that access to digital payment services. Thank you.